So today we continue our discussion on financial statements analysis, financial ratio analysis. So far, what we have discussed by way of review is that we have learned to construct a vertical analysis where the accounts, where the values in your income statement and the balance sheet are pegged to one specific value. In this case, for the income statement, we divide everything by sales. So we look at the percentage of the specific accounts in terms of sales. Now we said that we benchmark, we analyze this common size statement or vertical analysis, not only on a per year basis, but we benchmark against time. We look at what has happened to the specific ratio over the years. And then we compare it with the direct competitor. So that allows us to have a clearer picture of how the company has been performing over the years. Okay, so by way of quick example, guys, we saw that for 2020, our cost ratio really increased by 73.9% compared to 2019. Okay, our cost ratio is determined by your cost of sales divided by your sales. So there was a great increase of 73.9% between these two periods, 2019 and 2020. Now, between 2021 and 2020, it increased by 16.5%. So over the years, it seems like the cost ratio has increased tremendously, but it went down to 16.5% in the latest year. And then we benchmark this against how the direct competitor performed relative to the industry, relative to our performance. So we don't look at ratios in isolation. We take a look at it and try to make sense out of it by looking at the bigger picture. Okay, we don't only look at the cost of goods sold in isolation. We take a look at this in relation to the other costs. For example, 82.4% means for every peso of sales, the company is spending 82 centavos to make the product. Okay, and then for all the operating cost, it costs the company 93 centavos. Now, is this good or bad? Well, in a sense, it's good compared to 2020 because in 2020, 1 peso of sales accounted for around 1 peso of operating cost. So almost all the sales were swallowed by the operating cost. Okay, so it improved by 12.3%. Okay, 12.3% improvement. Okay, let me see. So this is, that was the it increased by 12.3% as far as total operating cost is concerned. However, guys, even if it increased by 12.3%, the ratio of your operating cost to your sales was way low compared to 2020. In fact, in 2020, as I said a while ago, 1 peso of sales already accounted for 1 peso of total operating costs, so that there was practically no EBIT already left. Okay, in 2021, it was 7 centavos. In 2020, it was not even 1 centavo. It was just 0.3 centavos. And then in 2019, it was 6 centavos. Okay, so we also did the common size statement for the balance sheet, where everything is compared to your total assets or total liabilities and equity. Okay, so we looked at how the company was performing in terms of EVA. We said that in 2021, value was being created. ROIC was 13.4%, higher than the 10% benchmark rate of weighted average cost of capital. But in 2020, it was just 0.9%. So we say that value was destroyed in 2020. And that's shown by the EVA. Okay, the economic value added in 2021 was positive 75,821, but in 2020 it was negative 103,396. So last time we started doing the ratios. We say that there are 5 major types of ratios that we look at. The liquidity ratios tells us of the company's capability to pay its current obligations as they fall due. Then you have asset management ratio, tells us how efficient the company is in utilizing its assets, its current assets, its working capital, and also its long-term assets. And then debt ratio, okay, tells us of the leverage, how the company is, how the company's capital structure is set up. And then we have profitability ratios and then market value ratios. We're going to finish this today, look at DuPont analysis, okay, and then the Altman Z to determine if the company is going to become bankrupt or not. Okay, so last time, guys, we looked at liquidity, and we're saying that liquidity, for example, current ratio, tells us of the capability of the firm to pay its current obligations using the formula current assets over current liabilities. So 2.6 here means that for every 1 peso of current liabilities, the company has 2.6 pesos of current assets to pay its current obligations. Now, again, how do we analyze this? How do we comment on the quality of this current ratio? We benchmark it over time compared to the previous years, and then we benchmark it against the direct competitor or the industry. We say that the company is less capable of paying their current obligations compared to the industry. However, compared to 2020, there was a marked improvement as far as the current ratio is concerned, from 1.5 to 2.6. Okay, there was a drop as far as current ratio is concerned by comparing 2019 and 2020. From 2.3, it became 1.5. What's most telling about this, as I said, is the competitors are more capable of paying their current obligations relevant compared to the company. A more strict measure of liquidity is the quick ratio, where we only include the most liquid assets, cash, marketable securities, and receivables. Okay, so it's only 0.9, which means that if the obligation would become due today, and assuming the company would be able to quickly convert marketable securities into cash and receivables quickly collected, then they only have 0.9, 90 centavos for every peso of one of current liability. Compare that with the industry or the direct competitors have greater capability. Okay, and the most and one of the most let's say strict measure is the cash ratio, where we just compare the cash compared to the current liability. Okay, so this means that if we're only going to use cash now to pay current liabilities, then the company will be hard put in paying its current obligations, because they only have one centavo of of cash in order to pay 1 peso of current liability. Okay, so this is a very strict measure of liquidity, the cash ratio. Okay, then we looked at the asset management ratio, and these are very important ratios as far as the looking at the operating performance of the firm is concerned. You have these 3 ratios: ITO, RTO, and APTO. This tells us how many times a year. Okay, ITO, for example, tells us how many times a year the company is able to buy raw materials, convert to finished products, and then sell. Okay, I hope you watched the video, guys, on the discussion of this. Okay, so this is just a very quick review. 3.9 times means the company is able to buy raw materials, convert to finished goods, and then sell 3.9 times a year. How does that compare with the direct competitor? We pale in comparison kasi ito 6.1 times. The higher the ITO, the better, because that's the velocity the company is able to sell its goods, its finished product. 6.1 times. There seemed to be a deterioration in 2021 kasi noong 2020, 5 times sila nakaka-convert into yung inventory into sales. In 2019, it was only 4. Okay? So ITO is very important, guys. It's the velocity by which a company converts its goods into finished product and then sell. As I mentioned a while ago, the higher, the better. Okay, ano naman yung ARTO? ARTO is the number of times a year the company is able to collect on its receivables. Okay, after they sell the goods, ilang beses sa isang taon nakaka-collect yung company. Okay, the higher of course the better also. 10.2 times. Okay, ibig sabihin si direct competitor, they're able to do this 10.2 times. Samantalang si company 9.3 times lang. Noong 2020, they were a lot better kasi 11.9 times. Okay, up to how many times a year does the company buy on account raw materials, for example, and then pay their their suppliers? Okay, so 15.1 times. Okay, si competitor. We'll look at the implication of this as we go along. No? Okay, so a related measure for inventory turnover is DIO, or that's accounts inventory. Okay, average inventory period or days inventory outstanding. These are similar similar ratios. Ito ang tingilan dito number of times yung ITO. Ito naman number of days. Okay, so we just convert. Okay, we can convert our ITO into DIO by using this formula. Okay, it's just the operating days per year. In this case, it's 365. Okay, in fact, we gave this a name. Take a look at this, guys. 365. We gave this a name, Oper days. Okay, so how do I convert ITO into DIO? Okay, just divide your ITO to operating days. Okay, operating days divided by ITO. So that means 95 days. Ano ibig sabihin 95 days? It takes the company 95 days to buy raw materials, convert to finished goods, and then sell. Okay? Ibig sabihin matagal yun, guys, no? 95 days. Kaya nga 3.9 times a year lang nila gagawa yun. While the direct competitor, guys, it takes them 60 days. Tayo 95 days, yung direct competitor 60 days. So sino mas mabilis gumawa? Si competitor, kasi sila 60 days nabenta na nila eh. Tayo on the 60th day, either ginagawa pa natin yung goods natin or we're still working on it, no? So ahead yung competitor ng 35 days compared to our company. So dito talong-talo yung company, no? In fact, noong 2020 mas mabilis pa nga, 73 days. Okay? Now, day sales outstanding, again, we convert your ARTO dito. Guys, kino-convert natin si ARTO. So that's operating days divided by ARTO. Okay. Related yung ACP to ARTO. Okay? Para magkapatid yung dalawang yan. They give the similar measures. ARTO nga lang, number of times a year. Itong DSO, number of days. So we can convert the number of times a year into number of days by dividing the times a year to the number of operating days. No? So dito, once again, we divided operating days by the ARTO. So ano ibig sabihin itong 39 days? Ibig sabihin, from sales on account, makakakolekta tayo within 39 days. Talo tayo ng direct competitor kasi in 15 days, guys, nakukolekta na nila yung sales on account nila. Okay? So tayo maghihintay pa tayo ng 24 days more. So 39 minus 15. Okay? So in that regard, guys, mas efficient yung natin, yung direct competitor. And then days payable outstanding, ano ibig sabihin nito, guys? Also, operating days divided by the APTO. Okay? So ito, days payable outstanding related kay APTO. Operating days divided by the APTO. Ano ibig sabihin nito? In 27 days, guys, we have to pay our suppliers. No? Samantalang si direct competitor, 90 days. So ibig sabihin nun, mas mataas yung credit terms sila kaysa dun sa sa atin. Tayo, binibigyan lang tayo on the average 20 days, sila 90 days. Okay? So, itong dalawang to guys, very important to yung operating cycle. Ano yung operating cycle? Okay, ito yung tinatawag nating cash to cash cycle. Okay, we buy raw materials, convert to finished goods, sell, and then collect. So all in all guys, 134 days lahat yun. Okay, so we're adding the days inventory outstanding and the day sales outstanding. So it takes the company almost ano na, no? Almost half a year na para ma-collect, no, yung receivables sila. From buying raw materials, converting to finished goods, and then selling and then collecting. While the direct competitor, 75 days lang guys, na-collect na nila yung ano nila, yung goods, yung cash. Okay? So dito pa lang guys, makikita natin na we lack. Talo tayo, no? Okay, in fact, mas maganda pa noong 2020 kasi within 104 days, within mga 3 months, 3.5 months, around that, we were able already to collect our receivables. Okay, cash to cash cycle yan guys, yung operating cycle, ibig sabihin, buy raw materials, then convert to finished goods, sell the goods, and then collect the receivables. 104 days in 2020, 134 days in 2021. So medyo nag-deteriorate in terms of asset management. Okay. So another important measure guys is the cash conversion cycle. Ano yung cash conversion cycle? If you watch the video guys, I hope you did, no? I hope you did. Ito yung cash conversion cycle. Ito yun. Okay, so let me clarify this. Okay. So yung cash conversion cycle, ano ibig sabihin yan? Okay. Ito guys, ito yung operating cycle ng company natin, 134 days. Ibig sabihin nun, bumili tayo ng raw materials dito, convert into finished goods, sell, and then collect. 134 days. And then we compare it with the days payable outstanding. Si days payable outstanding natin, 27 days. Ibig sabihin, hindi pa natin nako-collect yung ano natin, receivables natin. Kailangan na natin magbayad sa supplier. Okay? Ano ibig sabihin nun? 134 days, okay, minus 27 days, 107 days. Ito yung cash conversion cycle natin. Ano ibig sabihin nun? Kasi pagdating ng 27 day, kailangan na tayo magbayad. Eh wala pa yung collection natin. Okay, so on the average, on the 27th day, magbabayad tayo. So where do we get that? Manghihiram tayo. Manglo-loan tayo, guys. Okay? Maglo-loan tayo ng short-term loan para bayaran si supplier. And then it will take us 134 minus 27 days, that's 107 days to pay our loan. Okay? So that's 107 days. So yung number of 107 days, which is your cash conversion cycle, is the number of days for us to pay back the loan that we had here on the 27th day. So the longer the cash conversion cycle, okay, the higher will be the interest. Kasi ito, inutang natin to eh. And it will take us pa 107 days pa bago mabayaran yung loan na yon. Okay? So, and this is because guys, to the very high operating cycle natin. No? Compare that with our direct competitor. Si direct competitor guys, ano yung sabi natin sa kanya? Yung operating cycle niya, 75 days. So dito makukolekta na niya yung receivables niya. Okay? Pero kailan pa niya babayaran yung payable niya? The direct competitor is given 90 days. Dito pa niya babayaran yung payable niya. Ibig sabihin nasa kanila na yung cash on the 75th day. So meron pa silang 15 days para gamitin yung cash na yan for other purposes. Okay? Kung pwedeng i-deposit yan for 15 days, like maliit na interest, okay? Or etc. whatever purpose guys. So this is the cash conversion cycle of your direct competitor, negative 15. Okay, so pag negative 15 yan guys, ibig sabihin, okay, the company is able to collect their receivables ahead of time. So meron pa silang 15 days. Okay? Now, I mentioned in the discussion last time that okay din yung negative na cash conversion cycle, pero wag lang taken into the extreme. Bakit? For let's say ito example natin, ano? Ang operating cycle ng company operating cycle 30 days. Ibig sabihin, within 30 days, na-convert na into finished goods, nabenta na, nakolekta na kagad. Example lang to 30 days operating cycle, no? Cash to cash na yan. Tapos days payable outstanding nila, 180 days. Okay? I mentioned in the discussion last time that kunyari, si SM medyo ganun ng patakaran, no? Babayaran nila yung mga customers nila siguro mga 4 months, 5 months, even 6 months, no? So sabihin natin 30 times 6, 180 days. So ano mangyayari diyan? Ang cash conversion cycle nila, so this is your operating cycle 30 days minus 180 days. So that's negative 150. Ibig sabihin nun, meron pa silang 150 days para gamitin yung cash bago nila bayaran yung mga customers. Okay, in principle, that's good. Theoretically, that's good. Kaso nga lang, guys, in a symbiotic relationship, kawawa yung mga customers, no? Kaya nga, makakagawa ka lang ng business sa mga malls na ganyan. Pag mahaba yung PC mo, no? If you have enough cash flow. Okay, I have a friend who was forced to stop kasi so he doon sa Robinsons na nag-ano kasi mas relax yung ano ng Robinsons compared to SM, no? Sa in terms of the days payable outstanding. Okay? So that's a very important measure, guys. Itong dalawa, no? Operating cycle at saka cash conversion cycle. Okay, ito sobra naman, guys, 107, no? Okay, something has to be done about this kasi ibig sabihin hindi nakaka-collect kaagad no? Okay, days sales outstanding 39 days. Okay, days inventory outstanding, ito yung masama dito sa company na to. Kasi it takes them 95 days to convert to finished product and then to sell. 95 days. Okay, so overall, guys, cash conversion cycle, this will incur interest 107 days bago nila mabayaran yung payable sila. Okay? All right, then we discussed FATO. FATO is simply FATO is simply, ang formula natin dyan is sales over fixed assets, and then your TATO is your sales over total assets. Okay? Kindly check, baka guys may nagkamali ang formula dito kasi nabigay ko yata sa inyong file, parang net income yata to no? Mali yun, no? It should be sales. Okay, so ano ibig sabihin itong fixed FATO na to? The higher the better, no? Ibig sabihin, you're able to generate sales based on a peso of fixed assets. Okay? So 8.4, ibig sabihin, for every 1 peso of fixed assets, the company is able to generate sales of 8.4 centavos. In fact, guys, tingnan nyo, mas maganda pa nga yung performance niya kaysa direct competitor. Okay, kasi ito 7 lang, okay, tayo 8.4. Pero we fail in comparison, 2.5 kasi yung competitor, tayo 2 lang dito. And across time, nag-improve naman yung FATO. Okay, nag-improve naman yung sales. Yun nga lang guys, yung sa working capital, pag-manage sa working capital, talagang talong-talo tayo dito sa operating cycle at saka cash conversion cycle. Okay, let me pause for a while. Clear so far, guys? Any questions? Kindly chat, guys, kung clear so far. And I really hope, guys, that you watch the video on this kasi medyo review tong itong dinidiscuss natin. Okay. Right. Thank you guys. Salamat. Okay, kasama to guys sa long quiz natin sa Wednesday. All right, good. Okay. All right, let's move on, guys. Let's go now to the remaining ratios, yung profitability ratio at saka yung market value ratio. First is operating margin. Tingnan niyo yung formula, EBIT over sales. Okay, in fact, andito na yan sa natin, no? Andito na yan sa sa vertical analysis. Ito na yun EBIT over sales. Ito. Yan. So that's 0.0717 centavos. But let's just write the formula. Okay. So ito pala. Sorry. Ito pa palang guys, yung debt ratio times interest earned. Okay, ang debt ratio natin will be total liabilities over total asset. Ibig sabihin nito, guys, we have discussed this before. How much yung per peso of asset natin, how much is being financed by debt. You notice, guys, that in 2020 talagang tumaas yung debt ratio natin, naging 80.7. Okay? Tapos it went down in 2021. Okay, there was infusion of more capital in 2021. Okay, sa yung direct competitor natin, 50-50 yung ano nila, yung debt ratio. Okay? And then times interest earned, ano yung times interest earned? EBIT divided by interest expense. Okay? So, ang TI guys, yung times interest earned, it tells us how much EBIT, how much operating profit do we have for every 1 peso interest expense. So of course, the higher, the better. No? Kasi ibig sabihin nun, ito 6.28, meron tayong 6.28 na profit to pay a peso of interest expense. Although dito noong 2020, medyo bumaba talaga kasi nga nag-incur tayo ng mataas na interest expense tapos ang baba ng operating profit natin. Okay? So we are at par with the direct competitor, 6.2 sila. And then EBITDA coverage, okay, ano naman yung EBITDA coverage guys? Okay, ito yung available natin na returns, okay, divided by lahat ng mga fixed expenses natin. Interest, principal, at saka lease. Okay, so ito, 1.07 means that the company has just a bit enough operating profit in order to pay off its fixed expenses. Yung fixed expenses natin dito, yung interest, yung principal, at saka yung lease. But we pale in comparison to the direct competitor kasi 8 sila eh. Tayo 1.07 lang as far as 2021 is concerned. Okay? And then operating margin natin, magkano ang operating profit ang nakukuha per peso of sales. So that will be our EBIT. So kunin natin dito. EBIT natin divided by sales. Okay? EBIT divided by sales. Okay, then we copy this. Okay, how do we interpret this? Ito nga nung 2021 bumagsak siya, no? Kasi 0.003 na lang si si 2021, no? Well, as far as the performance over time is concerned, the company has improved its operating margin, no? 0.06 and then bagsak noong 2020 pero nag-recover siya noong 2021. However, we pale in comparison to our direct competitor kasi si direct competitor 9 centavos of operating margin for every peso of sales. Tayo 7 centavos lang. Okay, profit margin guys, yung bottom line na net income after tax divided by sales. So we go here to the bottom, net income after tax. Net income after tax divided by sales. Okay. Yan, divided by sales. Okay. Okay, so of course there was a marked improvement compared to 2020 kasi net loss na tayo noong 2020. So naging positive na naman tayo, 4 centavos for every peso of sales. Better than 2019, much better than 2020. But we pale in comparison with the direct competitor kasi 0.06. Okay? Now, basic earning power, this indicates how much operating margin, operating profit are we generating for every peso of sales. So, ang formula, EBIT divided by total assets. So, compute natin yung basic earning power natin. So, that's EBIT divided by our total assets. Okay, here, 3516. There. Okay, so our BEP. Okay. So, compared to 2019, pareho lang, no? Level lang tayo. Compared to 2021, there was a marked improvement. Tumaas kasi EBIT natin noong 2021. Pero again, we fail in comparison with the direct competitor. Kasi sila 0.18 sila, tayo 0.14 lang. Okay. Then other measures are ROE, ROA, ROE, EPS, price earnings, price cash flows. So the formulas, guys, are pretty straightforward, no? ROA, return on assets. Pag nakakita ka guys sa mga return na ganyan, ang denominator natin yan is net income after tax. Okay? In fact, naalala niyo ROIC, the denominator is net, NOPAT naman yon, no? So medyo ibang ratio siya kasi hindi natin tinitingnan yung net income after tax but rather net operating profit after tax. Okay? And ROIC, it's a better assessment measure as far as operations is concerned. Kasi di ba pag NIAT, binabawas yung interest expense. Okay? So if you want to really assess operating performance, then ROIC is better than ROA or ROE in terms of metrics. Okay, so sige, ano natin to guys? It's just ROA, return on assets, net income after tax over total assets lang yan. Okay, so net income after tax, nasa taas. Okay. Net income after tax divided by the total assets. Total assets natin is this one. Okay, that's 7.2%, or that's 7 centavos, no? For every peso, for every peso of assets that the company invested in. Copying that, okay. 2021 negative siya kasi ang net income ng 2021 is net loss na, no? So ito, ibig sabihin nito, the company is losing out 3.3 centavos for every peso of total assets the company invested in. Okay? And better performance relative to 2019. Okay, we're comparing 2021 and 2019. 2020 and 2019 nag-improve, malaki improvement. Pero talo pa rin tayo ng direct competitor kasi 9% sila. They're generating 9 centavos of below the line of the net income after tax for every peso of assets, no? Ganun din man gas si ROE, no? Return on equity, ganun din net income after tax, pero ang divisor natin will be total equity. Okay, so net income after tax divided by our total equity, nasa balance sheet siya, 1977. Okay, so pretty straightforward guys yung yung formula, madali lang yung formula. Yung interpretation naman, we just take a look at the ratio, we compare it over the years, and we compare it to the direct competitor, no? Okay. Yeah, 12.8. There was a decrease compared to 2019, 2019 mukhang mas efficient yung natin, Y-shoes ng equity, no? Okay, 13.3 ngayon, 12.8. Of course, mas magaling ng 2021 compared to 2020. However, guys, again, ang layo natin compared to the direct competitor. So the direct competitor should be doing something that the company should investigate. Ano ba yung ginagawa nila? Why are they performing better as far as many profitability ratios is concerned? Okay, so the last three profitability ratios are EPS, price earnings ratio, and price cash flow ratios. Okay, ano yung EPS natin? Okay, so it's just net income after tax divided by the average number of shares. So we compare now net income after tax there divided by average ng number of shares natin. Okay, ang number of shares natin 2021 and 2020. Average nun. So our EPS, earnings per share, 1.45. Ibig sabihin nun, for every 1 peso of share, okay, the company is generating 1.45 of income. I-copy natin yan sa 2021. Hindi natin pwede i-copy yan sa 2019 kasi wala tayong shares dun sa 2019. So EPS negative nung 2019, 2020 kasi nga ang net income natin ng 2020 negative. Alright, pero talo pa rin tayo sa direct competitor kasi 1.85 sila, no? Yung EPS nila. Okay, last two guys, price earnings ratio. Price per earnings ratio. Ang formula niyan, magkano yung price per share ngayon this year divided by the EPS. Ito na yung EPS natin. So magkano yung price per share natin? Okay, magkano daw yung price ngayon? It's ito, 12.17. Okay? 12.17, okay? Divided by EPS. Okay, price per share divided by EPS. Okay, 8.4. Okay, if we divide this, guys, okay, walang sense to, no? Kasi price per share, hindi naman pwedeng hindi naman pwedeng maging negative yung price ng stock. Okay, ang ibig sabihin lang nito, magkano ang benta ngayon ng stock for every 1 peso of earnings generated per share. Okay, so si company 8.4, ito we can't give any meaning here because there's no such thing as negative price. No? Okay, so this happens when you have a negative EPS. So we cannot interpret this. So mas mahal guys yung sa company. No? Mas mahal yung sa direct competitor kasi sila 9.5 pesos ang price nila ngayon sa market per 1 peso of EPS. So mas mura pa rin si company natin. In this regard guys, okay? In this regard, mura ang kung bibili natin yung yung share of stock ng company natin. Kasi ibig sabihin nun, bibili natin yan at 8 pesos and 40 centavos and then expect 1 peso of earnings. Okay? 1 peso of net income. Ito 9.5. Pero guys, of course, pwede natin sabihin, some investors will be willing, no, to pay 9.5 pesos, okay, per, kung ang promise sa kanila 1 peso lang na 1 peso lang na earnings per share. Kasi nga mas maganda talaga yung quality ng ng earnings ng competitor natin. Okay? Okay, and then last guys, price to cash flow. Okay, so that's share price divided by operating cash flow per share. So this is equal to share price natin dito. Share price. Okay, this one. Okay, divided by okay, operating cash flow now. Okay. Itong operating cash flow guys, makukuha lang natin yan kung ginawa natin yung cash flow statement. Okay? So I leave that to you guys as an exercise. Okay, so some of you submitted yung cash flow statement. Andito yung cash flow statement guys. Okay, so I hope you do this on your own. Okay? So ito yung operating cash flow natin. Okay, actually net income, the net income after tax. Okay, pwede natin palang gawin ito. No? Tapos depreciation. So magkano yung net income after tax natin? Net income after tax natin is this one. And then add back depreciation. Depreciation and amortization natin is 120. Okay. So ito guys yung yung operating cash flow natin. Ito. The sum of this. So let's do that. So this is equal to price. Price natin. Price, stock price, divided by sum. So this is our operating cash flow. There. Wait, operating cash flow per share. Kulang pala ito. Operating cash flow natin per share. So divided by number of shares. Dapat atin ito. Okay. So anong ginawa natin dito guys? Okay. It's operating cash flow per share. So it's the share price, C39, divided by, ano yung operating cash flow per share? Kinuha natin yung operating cash flow natin, which is just net income after tax plus depreciation, okay? And then divided by per share, no? average ng beginning at saka ending na number of shares natin. Okay? So we have to construct also yung 2020 na cash flow statement para makuha natin. Okay? But then again, guys, we fail in comparison to the competitor kasi sila nakakapag-generate sila ng 7 pesos and 6 centavos na cash flow sa bawat share. Sa bawat share ng owners. Okay, so talo tayo dito din. Okay, last two guys, market value. Market value per share or book value per share, simply the total equity divided by the average number of shares. So ano yung total equity natin? Our total equity is this one divided by the average shares natin is okay. Oops, sorry. Wala yung formula natin. So this is equal to total equity. Ito yung total equity natin divided by the average. Ano yung spelling ko? Average of the number of shares. Control and enter. Okay, so let me flash the formula. Okay. So just follow the formula, guys, no? And then the interpretation should be based on the formula itself. And when you interpret, you compare among the years, and then you compare with the direct competitor. Okay, and then last for our ratios, okay, market to book ratio, it's just the market value per share. So ano ba yung market value per share natin? Ano yung market value per share? So ang market value natin ngayon is share price natin, ito, no? Divided by the book value per share. Paano natin makukuha yung book value per share? Okay, so we just get the magkano ba yung magkano yung book value. So makukuha natin yan sa total equity. Okay, and then divided by per share natin is the average of hindi natin sa loob to. Okay. Then flash ko yung answer, ha. Okay. So what's this formula, guys? This is the market per share ngayon, market value, okay, divided by book value per share is simply your total equity divided by your average number of shares. Okay, so let me give you a few seconds maybe to follow along. Okay, let me pause for a while, guys. Okay, you might have some questions anywhere here. Okay, questions, guys, about the formulas? Clarifications about the formula? Okay, let's spend a few seconds. Pause muna tayo. Let's Baka kasi may mga questions kayo. Tingnan. Okay. No questions? Clarifications, guys? Feel free to ask. Clarification. Can you repeat the formula for EBITDA coverage? Okay, sige. EBITDA coverage. Okay. Ito, no? EBITDA coverage. Okay. So the formula is EBITDA plus the lease. Okay, ano yung EBITDA natin? So that's earnings before interest, taxes, depreciation, and amortization. So, okay, kasi meron tayong ano guys, ano? Meron tayong, okay. We have EBIT, no? EBIT. Tapos ibabalik natin si interest at saka si ano so from EBIT, okay, C9, C7 nila. C9, C7, at saka C44. Okay, so that's your EBIT plus depreciation, so that's your EBITDA, no? Okay, plus our, okay, so look at the formula, no? Okay, EBITDA plus lease. Given tayo ng lease amount, okay, let's see 44, this one. So may lease payments tayo. Okay, so idadagdag natin si EBITDA, si EBIT plus the depreciation para makuha natin yung si EBITDA plus the lease payments. And then divided by interest plus principal plus the lease. Okay, so paano natin makukuha yung interest? Si interest guys, alam natin yan, nasa income statement natin, C10. So interest natin is, okay, asan na si interest natin? Nasa income statement. This is interest. No? And then principal payments. Paano natin makukuha si principal payments? Ito guys, tingnan nyo. At the beginning of the year, meron tayong 1 million na long-term debt. Tapos naging 500 na lang. Ibig sabihin, nagbayad tayo. No? Nagbayad tayo ng principal. 1 million minus 500. Okay? So 1 million minus 500 yun. So siya. Okay, no? So this is the interest payment. Ito yung principal payment natin kasi dapat kasama yan. No? Okay, magkano yung binayaran natin na principal. And then C44 is the lease. Okay, pareho lang itong lease na to. Okay, so that will be our EBITDA coverage for 2021. Ngayon sa 2019, okay, take note, ba't nawala yung principal dito? Ba't hindi natin sinama yung principal? Kasi noong 2020 guys, if you take a look at the long-term debt, hindi tayo nagbayad. No? From 323, naging 1 million. In fact, tumaas pa nga, nangutang pa tayo. No? Nangutang tayo ng principal. Dito lang tayo nagbayad from 2020 to 2021. So ito tayo merong principal payments. 2019 to 2020, wala tayong principal payments. In fact, nangutang tayo. Okay, 323 naging 1 million. So you'll have to see kung may mga payments tayo ng principal between years. Kaya magkaiba guys yung yung EBITDA natin, EBITDA coverage between 2020, 2021 and 2020. Okay? Did that answer your question? Okay, so you notice guys, magkaiba yung EBITDA coverage natin ha. Ito naman, okay, ganoon din, no? Wala tayong principal payments sa 2019. Okay. Thank you. Thank you, Yana. Okay. Any other questions, guys? Okay. All right. Kung wala na, let me proceed, guys. We have two more important topics here. Unang-una yung DuPont. DuPont, and then the Altman Z. Okay, DuPont, guys, was developed by a company, DuPont, no? Chemical company to sa US. Kasi before, ang importante yung measure ng ROIE. Pero sabi nga natin ngayon, na overtaken na to by other measures, ROIC, EVA, mas let's say mas quote unquote mas powerful measures yun when we're looking at capability of the firm to create value for the shareholders. Kasi pag ROE, guys, ang ginagamit yung net income after tax. Okay, so ang formula ng ROE is net income after tax, okay, over total equity. So this is net income after tax divided by total equity. Ito yung formula ng ng ROE, no? Net income after tax over total equity. So dito lagay muna natin, guys, yung formula natin. In fact, meron na tayo yan 12.8%. Meron na tayong ROE dito. Kinumpute natin yung ROE dito yan. 12.8, negative 17.1, 13.3. Okay? So we could have just linked it here. Pwede naman. Pero pinasok ko na lang din yung pwede natin ipasok yung formula. Okay, C13 over C35. Okay, and then copy to the right. Or you can just copy this. Ito. Pwede natin i-copy itong 12.8%, 17.1, 13.3. Ito yung direct competitor natin, 18% sila. So in terms of ROE, talo tayo ng direct competitor. 2021, guys, not worth mentioning kasi we're losing out. No? For every equity, peso of equity, the company was losing 17 centavos. Okay, clear so far, guys, yung ROE before I proceed? Kindly chat, please, kung clear yung concept ng ROE, return on equity. Kindly chat, please, if the computation for ROE is clear. How about the rest, guys? 7 pa lang yung nag-respond. Okay, good. Good. Sana makaabot tayo ng 20 plus. Waiting for other responses, guys. More than 50% responses tayo about the concept of ROE, return on equity. Gives us a measure of net income generated per 1 peso of equity contributed by shareholders. Okay. The rest, guys, wala pa kayong confirmation kung clear so far? Let me give a few more seconds to the others to confirm that clear yung concept ng ROE. Okay, waiting for others' responses, guys. 16 pa lang out of 30, guys, ang nag-respond. Let's wait for a few more, guys. I just want to know kasi konti pa lang barely 50% eh. Okay, the rest, guys, again, I'm asking kung clear yung concept ng ROE. Okay, so just a few more and then I continue. Feedback, please. Kasi pag ganyan, guys, ibig sabihin, some of you have already tuned off. Malaki number ng hindi nagre-respond. Eh. Ibig sabihin, hindi nyo alam na nagtatanong ako. No? Okay, I'm wondering why it takes a long time for you to, unless you have questions. Kasi wala namang nagaan ng questions. Okay, so, okay, let me proceed, guys. Okay, I hope next time, guys, mas mabilis yung responses natin. No? So that we don't, we were able to save on time. Okay, ROE, guys. So dati, this was one of the most important measures. Not now it's still measured, kaso this has been overtaken by other more robust measures like ROIC, EVA, MVA. No? So according to DuPont, since ROE at that time was a very important measure, we can look at it through three other measures. Okay, three other measures. So ang gagawin natin, si ROE, which is net income after tax over total equity. So ito yun, no? Ito yung ratio na yun. Okay, we're going to multiply it by sales over sales and total assets over total assets. So by multiplying it by these two amount, guys, you're not changing the value of your ROE. Okay, after multiplying it by sales over sales and total assets over total assets, we rearrange the ratios, no? So net income dinivide natin kay sales, si sales dinivide natin kay total assets, and then si total assets dinivide natin kay total equity. Yun. And the same, this is the same measure, no? ROE pa rin to. Okay, kaso nga lang, we're now generating three different ratios. Okay, so ang tawag dito, guys, ito yung DuPont, no? DuPont three-way ratios. Okay, may five-way din yan, no? But we're not going to look at that. Okay, DuPont three-way ratios. So we're looking at ROE in terms of this ratio. Net income after tax over sales, that's your profit margin. Sales over total assets, that's your TATO. Total assets over total equity is what we call your financial leverage multiplier or equity multiplier. So DuPont was saying that in order to increase ROE, kailangan tumaas tong profit margin, tumaas tong TATO, tumaas tong financial leverage multiplier. Okay? Anong ibig sabihin ng financial leverage multiplier? Ang sinasabi niyan, dapat we increase your total assets by maintaining total equity. So ibig sabihin, kung pababain natin to yung total equity, ibig sabihin gagamit tayo ng debt, no? Okay? By infusing more assets. So this is what we call the financial leverage multiplier. So tataas tong FLM, yung financial leverage multiplier, by utilizing more debt, no? Okay, than equity. So that's one way in order to increase your ROE. Another way is to increase your net income after tax. Okay, okay, so pwede ipataas yung sales pero dapat tumataas din yung net income after tax. And then ito, tumataas dapat yung sales, okay, compared to your total assets. All right, so ito, guys, ang tawag natin dito, DuPont three-way ratios or three-way analysis. Okay, so let's now measure that. Okay, so this is profitability margin, TATO, and equity multiplier. Okay, so i-measure natin tong tatlong to, no? Okay, so this is your profitability margin. Alam natin yan, nakuha na natin sa taas yan, ano? So in fact, meron tayo dito niyan. Here is our profitability margin, no? Ito, 0.04. Or we can just write the formula. C13, okay, 0.04 to kasi pag in-increase natin decimal, that's actually 3.6, no? 3.6%. Okay, so just using the formula which we have already done above, so that's net income after tax divided by sales. Ito naman, TATO, meron na rin tayo nito, di ba, guys? That's your sales over total assets, which should be the same as this one. Sales over total assets, that's 2. Okay. And then lastly is your equity multiplier or this is your financial leverage multiplier, FLM. Financial leverage multiplier, that's your total assets over total equity. So total assets divided by total equity. There. Okay? Okay. So itong tatlong to, guys, just copy to the right kasi pare-pareho naman yung formula niya. Okay? Okay, now that we have computed for the profit margin, for the TATO, and for the equity multiplier, we can now get the ROE by multiplying the three measures. Profit margin times TATO times equity multiplier. So that's just your product. Okay? Product lang ng profit margin times Tato times equity multiplier in order to generate your ROE. So pareho lang siya, no? Pareho lang yung 12.8 natin dito na 12.8 dito. So ito, dinedecompose lang guys ng ni DuPont, dinedecompose lang niya yung ROE para malaman kung paano mag-i-increase na yung ROE. So according to DuPont, ROE can be increased by improving profitability margin, improving your Tato, and improving your equity multiplier because these three measures relate to ROE directly. Okay, so pause muna tayo, 1 minute guys. So I'll give you time to work on the formulas, or if you have any questions, please feel free to raise your hands. Okay, if you have any questions. Sige. Feel free guys to unmute yourself to ask questions or to chat please kung may mga questions dito sa mga ratios natin. Once again, sinabi natin si DuPont three-way analysis guys that was developed by DuPont, the company, the chemical company. As gusto nila ma-appreciate yung ROE, so ginawa nila, break down nila si ROE into 3 components. Okay, so there's a 3-way analysis, may 5-way analysis pa. There's a 5-way analysis of DuPont, no? But we're not going there. So you can research that. Okay, I'd like to ask guys, paki-chat kung clear so far yung DuPont natin. Any question? Thank you. Thank you. Okay, very good. Very good. Thank you so much, guys. Okay, so far wala naman tayong questions. Okay. All right. So here we were able to prove, na-prove natin guys na yung ROE, pwede natin i-break down into profit margin, Tato, and financial leverage multiplier. No? Okay. Okay. Now, I just want to point out here na yung financial leverage multiplier, ito, break down ko lang, ano? That's total assets over total equity. Okay, and total equity is equal to total assets minus total liabilities. Diba? Equal lang yan. Okay? So dito, after this, dinivide ko siya ng total assets. No? Okay? So this became, total assets over total assets became 1. And then, distribute natin yung total assets dito. That will be 1 minus debt ratio. So what does this mean? Okay? What does this mean? Kailan tataas yung FLM natin, yung financial leverage multiplier? Tataas yung ano natin, yung FLM kung ano guys? Kung ano? Kung palakihin natin yung debt ratio. No? Because this is 1 minus the debt ratio. No? Okay, take a look at this. Dito guys, naglagay ako dito ng ano ng debt ratio. Okay? So iba-ibang debt ratio, no? Hanggang 100%. And then i-compute natin yung financial leverage multiplier. So the financial leverage multiplier is simply 1 minus quantity 1 minus the debt ratio. Okay? So I copy the formula down. Okay, so you notice guys, habang lumalaking debt ratio, lumalaki yung financial leverage multiplier. Sabi natin, si financial leverage multiplier is directly linked to ROE, okay, return on equity. So if we increase the debt ratio, ibig sabihin mas malaking percent ng assets ng company is used by debt. Okay? Lumalaking financial leverage multiplier natin, tumataas yung ROE. Okay? So, ganun pala, no? Pag lumaki yung debt ratio natin, pwedeng tumaas yung yung ROE natin. Yes. Kasi related si ROE kay FLM, Financial Leverage Multiplier or Equity Multiplier. And we were able to show that here. So financial leverage multiplier, by way of summary, is just equal to 1 over 1 minus debt ratio. So pag tumaas yung debt ratio, guys, ano nangyayari? 1 minus debt ratio kasi siya. Pag tumaas yung debt ratio, lumiliit, guys, yung denominator. Pag lumiit yung denominator, lalaki yung quotient, lalaki yung FLM natin. Okay? As proven by this one. In fact, guys, pag 90% yung debt ratio natin, 10 yung FLM natin. So habang lumalaki yung debt ratio, habang mas malaking debt ang ginagamit natin relative to equity, tumataas yung FLM natin. Pag tumaas yung FLM natin, pwedeng tumaas yung return on equity natin. Okay? Well, kasi kung titingnan natin yung formula na to, guys, pag lumiit yung total equity natin, okay, assuming na pareho lang si total assets, di ba? Lalaki tong formula, lalaki tong natin, yung quotient na to. Pag lumiit si total equity in relation to the total assets, this amount will become big. So if this amount becomes big, your ROE, which is related to this, will also become big. Okay? So yun ang concept ng financial leverage multiplier. Okay? Pag lumaki yung debt ratio, pwedeng lumaki yung ROE. Kasi directly proportional si FLM kay ROE. Okay, last guys, last. Okay, we'll have enough time. Yung Altman-Z. Altman-Z, very interesting. Si Altman, guys, nag-research siya. Tapos, he came up with several ratios. Okay, ito yung mga ratios niya para ma-predict yung bankruptcy ng isang organization. Okay, so, iba't ibang klase yung Altman-Z Z-score. Okay, depende dun sa sa nature ng company. This is a company that's listed in the stock exchange, kaya nga may market value. No? Kasi pag hindi siya listed in the stock market, hindi natin mako-compute si market value. So magiging book value lang 'yan. Okay, so ito yung mga ratios, no? Working capital over total assets, retained earnings over total assets, EBIT divided by total assets, market value divided by total liabilities, and sales over total assets. Okay, ito yung tato natin to, no? Okay, so this measures, guys, sabi niya, pag minultiply natin yan siya 1.2, 1.4, 3.3, 3.6, at 1.3. So gumamit siya ng statistical dito, analysis. Tapos sabi niya, itong value natin dito, which is called the Altman Z-score, will be able to detect or predict if the company will become bankrupt in the next 3 years. Okay, so here, let's compute first. Working capital natin, guys, is simply your total current assets. Okay. So that's C22 over C24. C22 is your total current assets. Tingnan natin dito. Yan ang working capital natin there. Total current assets over total assets. Okay, yung iba, guys, mas strict yung nila, yung ratio nila, ang ginagawa ng iba, no? It's working capital nila is current assets minus current liabilities. Yun ang gawin natin. No? Okay. Total current liabilities. Yan. So that's actually your net working capital. Okay. So here, what we used was the net working capital, hindi working capital. Okay, so for our purposes, guys, let's just use the net working capital. That's your total current assets minus your total current liabilities. Okay, so that's 0.47. Ito naman, retained earnings. Okay, nakikita natin yan sa balance sheet. Retained earnings divided by total assets. Okay, and then this one is your EBIT, our operating profit, divided by our total assets. Okay, and this one is your market value divided by total liabilities. Market value is simply yung market capitalization. That's simply your number of shares. Oops. That's your stock price divided by your number of shares. Yun yung market value natin. No? Okay. oops, that's your stock price times the number of shares divided by your total liabilities. Okay, and then lastly is this is your TATO, no? Sales over total assets, C4 over C24. Okay. Okay, pause muna ako guys. Any questions as regards these formulas? Yung mga ano na to? Any questions about yung ratio? Okay, gamitin lang natin dito net. Kasi minsan hindi nila nalagay net but they mean it as net. Net working capital over total assets. Okay. Retained earnings over total assets. Okay. So apat dito na ratios nakalink sa total assets. Isang ratio lang nakalink dito sa total liabilities. And then these are factors. Right. Paki-chat nga please guys kung clear yung pag-measure ng mga ratios. Okay, good. Thank you so much guys. Thank you for the feedback. Okay. Now, we can now measure the Z-score. The Z-score is measured by multiplying the factors, okay, to the ratio. So this is 1.2 times this, 1.4 times 0.08, 3.3 times 0.14, etc. And then we can use okay. Doing natin guys. Hopefully you're doing this. So my function tayo sa Excel na sum product. This one. Sum product returns the sum of the products of corresponding ranges of array. So pwede natin shortcut to kaysa isa-isahin natin yan. Ano? So sum product, the factor, and the ratio. Ang gagawin niya, i-multiply niya bawat isa. Okay, kukunin niya yung product tapos isa-sum up niya. Okay? Alright. So we have now a value 4.34. Okay, so how do we now interpret this? Okay, i-chat ko lang tong site na to, no? For your reference. Okay, we can use this Control-C. Nasa chat box, guys. Okay. So that's the, we can refer to that. May iba pa mga references, no? Okay, here. So this is coming from CFI, Chartered Financial Institute. So this is a measure of the Altman Z-score. Okay? So according to Altman, guys, ito yon, no? Okay, if the ratio falls, if it's less than 1.8, then nasa distress zone yan. Ibig sabihin, there's a potential for the company to become bankrupt in the next 3 years. Yun ang distress zone. Kapag yung Altman Z-score is less than 1.8. No? Ito naman yung 1.8 to 3, gray zone. Ibig sabihin, hindi tayo masyadong definite kung pwede siya maging bankrupt, pwede hindi. Tapos if the score is between 3 and 4 and up, guys, no? Kung greater than 4 pa, above 3, then nasa safe zone. Ibig sabihin, there is no possibility for the company to become a bankrupt. Okay? So, andito guys sa site na to, yung maraming pang ibang site explaining what this Altman Z-score. Okay, sabi nga dito, it's a numerical measurement that's used to predict the chances of a business going down. 2 years pala, no? It was developed by finance professor Edward Altman in the 1968. Yun ginagamit pa rin to, no? Okay, as a measure of financial stability of the companies. And it has been proven true in many instances na a company became bankrupt. As mineasure nila yung Altman Z, indeed, the Altman Z score was less than 1.8. Okay. All right. So, pause ako for a while. Okay, I'll give you a chance to work on the Altman Z. Okay. And then, if you have any questions, guys, please feel free to write it down sa chat box natin or unmute yourself. Questions ba? Okay. Oo, Lian, thank you. Yung, Lian, kindly share your question to the class. Okay. Sige, I'll answer your questions, no? So first, si Lian, may question. The Altman Z-score does not require mean. Hindi, hindi. Yung Altman Z based on these formulas, no? May ibang formula ng Altman Z pag hindi siya listed sa stock market. Ang ginagamit nun, book value. Kasi pag hindi siya listed sa stock market, walang market value, book value lang. Tapos there are several instances, maraming ibang klaseng Altman Z. Itong ginamit natin is for a company that's listed in the stock market. Okay? So hindi siya gumagamit ng mean or standard deviation. Okay, so Lian, hindi mo pala shinare sa no? To the whole class sana. Okay, next question. Okay, may I know ask. Okay, so thank you Ed. Ed, paki-ano yung question mo? Paki-share mo sa lahat. Ed, kindly share your question. Okay. Okay, some product again. Okay, ang ginawa natin, dito binago natin yung Okay, ang ginawa natin dito yung working capital, ginawa na natin net working capital para mas conservative. Kasi yung net working capital, mas maliit yan kaysa kay working capital. So what I did was to subtract yung total current assets minus total current liabilities. Okay? So that's why we got 0.47. Tapos yung sum product natin will be sum product ng factor, yung factor given na ni Altman, no? And then multiplied by the ratio. So we use the sum product function of Excel. Ang gagawin niyan, kukunin niya muna yung product, individual products, and then isa-sum up natin. Okay, which is precisely the formula for the Z-score. Okay, let's see. 4.6, yeah, Ed. 4.67 to pinalitan natin yung letter A na ratio, no? Okay, Ed, did that clarify your question? Robert, question Robert, the factors are constant. Yes, yung 1.2, 1.4 constant yan based on the formula developed yan ni Altman, no? Ed, did I answer your question? Tung 4.34 and 4.67. Binago natin yung A, no? Ang ginamit natin net working capital. Okay, thank you. Thank you. Good. Okay, any questions? Any other questions? Thank you for your questions, guys. Very good. Very good. All right. Okay. Any other questions, guys? Okay, ask ko lang ulit. Paki-chat nga, guys, kung clear yung financial ratio analysis natin. Okay. Very quick summary, what we did was to understand that ratios are very important in order to assess the performance of the firm. Okay. Two fronts, no, over time and benchmarking against their direct competitor. We do not look at ratios in isolation. Kailangan holistic yung pagtingin natin. So we started with doing the vertical analysis, where we compare each of the accounts in the income statement and the balance sheet to a benchmark. So income statement, it's the sales. So balance sheet, it's the total assets or total liabilities and equity. And then how do you analyze this? Yung sa income statement, common size statement, we compare it with sales. And we look at how these accounts compare to sales. Ang pinaka-benchmark natin dito sales. And then we also compare it against time, no? Yung previous year's performance and also against the direct competitor. Okay? So it's best in financial analysis, kailangan meron tayong FS din ng direct competitor natin. So we did that also for the balance sheet. Okay, so horizontal analysis naman, ito yung year on year. Okay, tinitingnan natin yung increase ng mga accounts over time. Okay, and then we also had measures on NOWC, TOC. We did this last time. And we said more powerful than the traditional measures katulad ng ROA, ROE are ROIC. Kasi sa ROIC, naka-base yung measurement niyan sa NOPAT, hindi sa net income after tax. Kasi di ba unfair naman kung i-assess natin yung operations based on measures that are not within their control. No? And then we also did the MVA, okay, and EVA. No? EVA is really a very powerful measure. ROIC and EVA will be consistent with each other. Okay, and then we looked at yung mga different types of measures: liquidity, asset management, debt ratio, profitability ratios, and market value ratios. Marami sila, guys, and each of them have their own important measures, metrics. Importante, guys, yung sa management of assets, yung mga turnover ratios natin, no? Whether it's inventory, AR, and AP. No? And yung bottom line yan, guys, measure natin yung operating cycle at saka cash conversion cycle. Kasi gusto natin makita kung how efficient the company is in utilizing its assets, no? In order to generate sales. And then we also looked at DuPont, guys, which says that yung ROE, which was a very important measure before, no? Noong early 1900s, pero ngayon, guys, na-overtaken yan by other measures, but still it has its relevance. So ROE can be decomposed into three measures: yung profitability measure, yung TATO, at saka yung equity multiplier. The higher the profitability measure, the higher will be the ROE. The higher the TATO, the higher will be the ROE. The higher the FLM, financial leverage measure, ibig sabihin, kung tataasan natin debt ratio, tataas yung paggamit ng debt, pwedeng tumaas si ROE. Okay, and lastly, guys, we were able to look at the Altman Z. Sabi natin, sa 2021, itong company na to, 4.34 yung Z-score nila, it will not be bankrupt in the next 2 years. Highly unlikely na maging bankrupt siya. If this was between 0 and 1.8, then there's a great chance that this company will become bankrupt. Okay, it's already time, guys. In fact, I exceeded. I'm sorry for extending for a minute. Okay, let me stop recording.